No. So, Alessandra, can you hear me?
Yeah, I can hear you.
Perfect. So, welcome to Finance for CEOs, and let's see if whoever is able to join us, we can incorporate them from that point of time. Basically, things which we would be talking about today are mainly related to how the chief executive officer of the organization can not know entirely what exactly finance is, but still know certain things which they need to know in order to track, in order to ensure that their entity is sustainable, it is profitable, and at the same time, it's not running into near short term or long term debts. And we will also see how CEOs and CFOs take decisions in the entity which affect the long-term sustainability and the durability of the entity. And that's about it. So let's begin. So let's see what exactly is the role of the president and the vice president finance. Majorly, you are responsible to take decisions which are long term, which means they don't only consider your year, which is the next 365 days, but also the next coming year in terms of stability for finances and in terms of stability for the sustainability of leadership pipeline and productivity of human resources. Why are these things important for CEOs and CFOs? Is because your HR is the one which brings you results. And your HR would be retained and would stay and get you results only if you focus on that along with your TM. Of course, the TXP responsible would do that, but the finance officer and the chief executive officer also track and ensure that it is happening in the organization. And in terms of finances and operations, both of them are responsible to not only hold the operations responsible and accountable for the targets they have for their quarter in terms of achievement of numbers, but at the same time, they are responsible to provide solutions to the existing problems in the operations if it's happening. So if CEO and CFO are having a meeting in which they are looking at different financial data of the entity, and they are able to demark that, okay, this program has been dropping for the past 2 years, and this is how it's affecting the cash flow, the CEO and the CFO need to approach the program head and come up with a different strategy. Of course, you can take help of the MC, you can take help of the NSTs which are present and do that, but it needs to happen there and then in order to ensure that there is a sustainable decision making happening in the entity for no dropping in future. Next. Yes. So, what exactly are your tools to measure or to see whether your entity is doing it correctly or not? For that, you usually do accounting. Your finance people will be doing accounting, and when they are doing accounting and financial data recording from the bank movements, they would be able to create three financial statements, which are balance sheet, profit and loss statement, and cash flow statement. Now, why are these three statements important? You will get to know how exactly to read them because there is a vertical, horizontal, and ratio analysis of these three statements. But your finance people will be given the knowledge already by me how to create these statements. And they are supposed to create these statements and present to you and your EB in order to see how your entity is performing. But before we get on to how these statements are created or what do they look like, let's understand what exactly these statements mean. What is a balance sheet? So balance sheet is something which tells about an organization or a company holistic financial position at one point of time. So if today I open the balance sheet of ISEC in Spain, I will get to know the amount of assets we have. Assets is something which you own. Like there are two type of assets first, and fixed assets. So if you buy a printer, for your office, that is a fixed asset. If you buy a table or desk for your office, that is a fixed asset. What does it mean? It means you are investing in something which is going to stay with you for a long period of time. Asset. A liquid asset is the money which you have in the bank. So right now in ISEC in Spain, mostly which we have the assets which we own are liquid assets, and that's the money which is there in the bank, which comprises of the amount of month of reserves you have at this point of time, and how would you be able to use it in the right direction for the upcoming months. Next thing is liabilities. Now this is something which you can own to someone, which means if you owe someone, if you borrow money right now from your friend, that becomes your liability towards your friend. So if you take 100 euros from your friend, you need to return that 100 euros to your friend, maybe 20 euros for the next 5 months, and you will be able to repay off that liability. This, in other terms, for ISEC entities, internally, when it comes to between MC and LC, it is also called debt, because a debt becomes your liability to pay off to the MC. The reason why the liability comes, there are various reasons. We will not get into that right now, but I want you to understand the concept of assets, liabilities, and equity first. So that once that is your liability internally, the other part of the liability is external liability. Now how does this incur? External liability means if you owe money to any EP or company, and when this comes, when you have a problem with breaking of certain clause of the contract, where the partnership cannot be delivered, or where because of some reason the EP cannot go on exchange, and it's mentioned in your contract that ISEC will be giving refund on that. That is when you have an external liability towards that person, and in the accounting of your entity, it gets registered at the point of time when it actually occurs. This is something which your finance would know how to manage it. So you don't need to get into where and how to do that. You just need to know that when you are seeing your balance sheet, you need to see how much assets you have, how much liabilities you have. The last and the most important thing is your equity. So equity is exactly what you have in reality in terms of your reserves or in terms of your money. Assets could be higher, but your equity could be much lower. Why? Because assets is something which you own right now. So if I'll give you an example of this. So if you have 1,000 euro in your account, but you have a liability of 2,000 euros to MC, and when you see the accounting equation, your assets minus liabilities should be equal to equity, which means what you actually own is minus 1,000, because you have a liability of 2,000 to the MC, and what you own is 1,000 euros, which means ISEC in XYZ is running in debts. And this is exactly what you can see in a balance sheet, that it tells you what your real state of your entity or your organization is at this point of time. So to understand this better, I would like to take you to a screen, which can you see my screen? Alessandra, can you see my screen?
Yes, I was answering on the chat.
Okay. Do I need to answer something? Okay, no. Just let me know, because I can't see the chat. Okay, perfect. So I would like to take you to 3 different scenarios of what is happening in ISEC in Spain and what happens. Let's go to the balance sheet of ISEC in Pompeu Fabra. So ISEC in Pompeu Fabra Barcelona for the month of October started their month with 11,000 in their account. They had certain costs in the month of October. They had certain revenues in the month of October. Taking all that into consideration, the last day when they ended their month, they were left with 9,000 euros. But is this all that Isaac and Pompeu Fabra Barcelona owns right now? No. Why? Because Isaac and Pompeu Fabra Barcelona has certain receivables which they still haven't got from members or other entities of Isaac. And they have a proper track of all those things which they have to get from those entities. Thankfully, Isaac and Pompeu Fabra Barcelona does not have any liability, internal or external, for the month of October, which means what would be the equity of Isaac and Pompeu Fabra Barcelona? In the account, which is their asset right now, is 9,000 euros, but their actual equity is 10,000 euros. Why? Because there are certain receivables which they still need to get, which are mentioned over here. There is a 100 euro, 205 euros, and 480 euros. So the real amount which Isaac and Pompeu Fabra Barcelona, if they are able to get all their receivables in time, will have is 10,000 euros. Let's look at another situation, which is Sevilla. So Isaac and Sevilla, in the same way, they had certain revenues, they had certain costs, and they started their month with 1,082 euros in their account, and they ended the month with 802 euros in the account, which means their assets are 800 at the end of October. But let's see what is the real picture. Is Isaac in Sevilla healthy, or is Isaac in Sevilla running in a situation where they can afford to spend all this money or do whatever they want to do with it? Let's see. No. Why? Because in terms of liabilities, Isaac in Sevilla had 7,000 euro liability on the first day of October, and they were not able to pay off any part of that liability on the last day of October. In fact, they have certain liabilities externally to the members, and external liabilities of 350. So probably they need to return money to some EP because of breaking of a proof, and they have a liability of 61 euros to some external member, which means a member paid for something and they need to give it back. What is the real situation of Isaac in Sevilla? All they have is they're running in negative and they are in a debt of 7,168 euros, which means Isaac in Sevilla at this point of time is not at all healthy, and it cannot afford to have any excess expenses, and it cannot afford to also do less exchange, because if they want to get their debt cleared, they need to have a repayment plan of that. But what Isaac and Sevilla would be doing in the next few days is they have asset as their in their account, but they need to pay this short-term money, which means what exactly does Isaac in Sevilla own in short term is 421 euros. So once Isaac in Sevilla pays off what they have to pay off, probably which will happen in November, Isaac in Sevilla would be having an asset of 421 euros. Definitely 7,000 euros will exist still, but it is more of a long-term debt. So by this you can see, by having a proper balance sheet, you will be able to see how much equity you will have in short term and how much equity you will have in long term. The third case which I want you to see is of Isaac and Galicia, because Isaac and Galicia started their month with 2,000 euros. On the last day of October, they had 1,800 euros. What happened with Isaac and Galicia? Isaac and Galicia had to pay the fee, MC fee of 3,000 euros, which they were not able to pay because, of course, they did not have the money enough money in their account, and they did not start their month of October in a debt, but they ended the month of October in a debt, which means Isaac and Galicia went into debt this month. Had Isaac and Galicia known before, or had mapped their balance sheet before, they would have got to know that they are running in less cash flow. I will show you how to manage cash flow and how do you see profit and loss in the other statements which I will be describing, and then you can see how exactly it's connected with each financial statement. So Isaac and Galicia's actual equity is of negative 1,900 euros. And this is how balance sheet tells you the real status of an entity, and it helps you to know how your entity is doing. This sheet will be created by your finance people, but you need to know how to read it, because if you're not reading this properly, you will never get to know how your entity looks like at a certain point of time. If you have any questions, Alessandra, you can ask me. Maybe others can have similar questions regarding balance sheet.
I have one question because well, in Pompeo we are doing accounting with Contasol, and the problem is that I don't really know how to, like, when you are considering, for example, October, if you use the consolidated report, it's like very clear. But if you take the balance sheet from Contasol and you only ask for the October data, it does like some strange things, like it starts compensating accounts or something.
Okay. So for this is more of a financial question. So this is something which the LCVP finances will be solving. So sorry, I cannot answer this question in this forum, but of course we can have a call. Like I already had a call with Valencia regarding the accounting, and none of the entities of Isaac in Spain have their accounting balanced. The reason for that is, I will tell you. Over here, for instance, you wrote entity external fee 280 to 2860 euros. But what in reality happened was, there are different things for which you were given reductions on your invoice for this quarter. Ideally, you should put them over here, which means there was the return for national, like there was a deduction given for the past conferences that was 30 euros per, like 10 euros per delegate, which was returned. It should actually be put here in your receivable down here, that this was the receivable on the 1st of October from Isaac entities, and it got cleared off by the end of October. The real affiliation fee for Isaac in Pompeo Fabra was not this, but it was what we calculated on the sheet which I shared with you. This is something which I will be definitely teaching. It's more in depth, in detail, and it's more for the finance people to know, because accounting, I had a meeting with our accountants also in order to solve these problems of the accounting. We are not following the GFP charts, and that is why the accounting is giving problems. So I will take this up with you separately. Is that cool, Alessandra?
Yeah. Perfect.
Okay, perfect. Cool. Let's move to the next very important statement, and that is your income statement. It is also called profit and loss statement. This is exactly that statement which you need in your life to tell whether you are having profits in your entity or not. Whatever your income is, this statement is supposed to be updated every month by your finance people. And this is something which you as LCP need to ensure that is happening. It is majorly like, at the end of the year, for sure, you need to have an income statement, because it is created over a certain period of time, which could be in Isaac, it's 1 year. So you get to know annually if you ran in profits or you went in losses. And this is like overall if your entity is profitable or not. And then after you have that, you can calculate for each product if you are running in profits or not. So what is the relevance of income statement? The relevance of income statement is that for next year, it can help you to increase your profits in a certain month, or use your profits in the right way to plan your investments. Because usually what we do at LC level in Isaac in Spain is that we sponsor or cover the fee of a conference for members or for EB or for team leaders. And we don't know should we do it or not, because you cannot afford to invest. That's what we call it, like investing money on conferences or people until and unless they are making profits. So for instance, you have a delegation of 5 members of your entity and you really love those 5 members, and all those 5 members are super new, full of energy, but your entity is actually running in losses because it did not have enough profits over the past one quarter. You cannot afford to sponsor that conference for those 5 members, and you need to be able to say, your finance people will be telling you this, but you need to be able to say no to your every other VP, TXP, whatever, when they're saying, okay, no, we should sponsor this. If you don't see it through the profit and loss statement that you can actually sponsor it, you should say no to it. And this is something where the hard part comes, as LCP or LCVP finance, to actually say no to things, because we all want 100% delegates attending. We all want to be the best committee in the plenary, but at the same time, our entity cannot afford it. And this is also a part of sustainable decision making, because at this point of time, you take decisions which are long term for your entity and not short term just to cover a 2 or 3 days conference for a member. Here, the role of LCP gets different than from the LCVP finance, because the LCVP finance will just be like, okay, no, you can't do this. Even I do it a lot of times. I'm like, no. To whatever is proposed, I'm like, no. But how the LCP can play a very important role in this is, okay, we can't do this. We know that we have a conference in March. What can we do right now in order to ensure that all the delegates whom we want can attend that conference? And these are small things which you as EB, LCP can do for your members, is that let them know from now onwards that next conference, ISEC in whatever would not be covering fee for all the delegates, will not be covering fee for the EB. You need to work or find something else externally in order to compensate. Or you can ask your finance person to start looking for a grant within the university which would sponsor their conference, or a grant externally in Spain or in your region which would cover your LC's conference activity. Be very careful with the grants, because you need to ensure that you are fulfilling all the requirements which the grant asks. About grants, if you want to know more, you can ask me, because there are 2 types of grants. There are restricted grants and unrestricted grants, and we can talk more about that if you reach into that situation. But these are the solutions which you can propose to your LC members and to your EB members if your income statement tells you that you cannot afford this. The next statement is cash flow statement. Now, this is the best and the most important statement, because this is the statement which will tell you if at one point of time you will have enough cash flow in your entity or not. So if an LC has 2,000 euros as receivable, 1,000 euros in their account, and has to give MC fee of 3,000 euros for next quarter, what will the cash flow statement show? The cash flow statement will go in negative. Why? Because you have only 1,000 euro in your account. If you don't make your receivables of 2,000 euro to come in your account right now, you will not have enough cash flow to be able to have your short-term expenses covered. And your short-term expenses, big ones, are the LC fee. And this is exactly the true story which your cash flow statement tells you, is whether you will have enough money with you to do investments, to make expenses, to invest on your members or not at one point of time. And cash flow statement entirely depends on because if your LCVP OGT had a target of 2 approves this month, and does not achieve the target, which means in the budget of your VP Finance, there would be 700 euros less. And if there is 700 euro less, which means your cash flow for next quarter will be affected, and even for next month will be affected in short term, and next quarter will be affected because you will not be able to meet your upcoming expenses. And that is the story which cash flow statement tells, and this is what you need to learn how to read with your finance people, and understand that, okay, are we good in terms of cash flow or not? I will explain all these three in a very short summary. That balance sheet is something which tells you at one point of time how does your equity look like, how does your liability look like, and what are your assets. Income statement tells you the bottom line. It tells you that if you are running in profits or loss in a month, in a quarter, in a year. And it needs to be updated every month, of course, and then evaluation needs to be monthly, quarterly, and annually. So this year is going to end very soon, guys. Make sure you are asking your VP, current VP Finance, and your elects to sit together and create income statement, balance sheet of this year, and have a cash flow statement where you get to know where the money came and where did it go, and did you use it super well. Did you use your profits well in order to make the right kind of investments? And if you made certain investments, did it bring you more income? So these are the three things which you need to do. For cash flow management, I will be explaining later, but if until now, if you have any questions, you can ask. Any questions, Alessandra? Let me know because I can't see the chat.
No questions.
Okay, perfect. Now let's see what is very, very important thing which you need to know and which you need to see is the cash flow. And what exactly are you going to do with the cash flow? Now, whenever you have certain money which is in your account, you need to use it either efficiently to bring in more revenues, or otherwise you would be going in debts, or you would not be having a short-term capacity of paying off your expenses. Or if you have a recurring debt already, you need to ensure that, okay, your cash flow has increased. It's time to pay off my existing debts. So you have a payment plan, and you know when you will be increasing your cash flow, because when you make your budget, you get to know how your cash flow will look like. So you know that in quarter 2, I will be having a good cash flow. So in quarter 2, I will be paying 50% of my debt, and I will move towards a more sustainable and healthy entity. This is something which will help you to determine how or when or why to invest on membership. After they have delivered a peak, you have more cash flow. Okay, it's time that my members work like crazy in the winter peak. What will I do is I will try to cover some part of my next conference for the highest performing members, which is in V-Step. You give them the recognition and reward to cover some part of their expense for the conference. And this is exactly what the cash flow tells you. What kind of actions and impact does cash flow have on your entity? It tells you if your receivables are aging. So I gave you that example of if you have more receivables than what your assets are, which means your entity will not be having enough cash flow to be able to have its recent expenses measured or met. The next thing is that it will help you, if you know your cash flow, it will help you to be prepared for the uncertain times, and ensure that you will have and you will maintain reserves. Because if you don't have cash flow, of course you cannot be spending more amount. And this is exactly what your finance will tell you, that no, we cannot make investments right now. But your exchange could tell you, but we have this money in the account, why can't we make investments? You and your finance, you need to be able to see the cash flow of the entity and be able to say yes or no based on the cash flow. Because if you do not have enough cash flow for the next quarter to survive for the next quarter, that is when you start putting full stops and margins to whatever investment plans or whatever expenses you are going to have right now for the next quarter. And I will give you an example of this situation, how it occurs. For instance, if you are having a lick in the next quarter, right? But this quarter, your entity did not perform well in terms of operations, or the budget is not being fulfilled, or the 75% of budget of your VP Finance is not being fulfilled. What becomes your role over here as LCP? It's that time where you tell your co-EB in the EB meeting that, okay, guys, this is what our performance looks like. This is what our bank balance looks like. This is a real equity. Ask the VP Finance to have the Q1 lick to be sponsored by us. We need to have the venue, we need to have this. These are the expenses which we will have to do before the members come in, which means booking of the venue. How do you expect us to book the venue, which is for 300 euros? And right now in the account, we have just 400 euros. If we book the venue for 300 euros, in the account, we will be left only with 100 euros. And we also, every year in the past, what we have seen, that we cover the new members' fee for the lick. Sorry, this is that time where we stop creating the culture of covering any part of the fee for the lick for the new members. We need to do an expectation setting in the recruitment itself when we are doing the interview, that there will be a lick for which the fee is 25 euros. You need to pay 25 euros to go for that lick. Like the stay and the food is covered, and this is it. These are the basic minimum rules which you can set much in advance if you look at your cash flow, and not just before the event when it occurs. Because usually what happens is, when we have a lick and we see our money in the account and we're like, okay, let's arrange a lick because we have money. But in reality, do you have enough cash flow to be able to suffice your next quarter fee or not? That is something which you really need to look carefully along with your VP Finance. And that was something which will tell you the real status of your entity. Moving ahead, the roadmap of 2020, there's strategy number 5. Well, there are 5 strategies. The other 4 will be told to you gradually. Yeah, Alessandra knows, but others, if you don't know, you will get to know gradually. All the LCPs need to know this. This is super important. But there is strategy number 5, which is only for finance and legal. And in order to be 100% legal, you need to be sustainable in operations at all levels. That is something which is quoted on the roadmap for all the finance people and for all the LCPs looking at it. I want you to know about 6 standards in finance. So some of you might not know that there are finance standards which are also existing apart from team standards and exchange standards. Nice, sorry. So apart from exchange standards and team standards, we also have finance standards. And these are 6 finance standards which we as an entity are moving gradually towards fulfilling. And one of the major role of your finance people is to ensure that finance standards are being achieved and implemented at their LC level and for ISIC in Spain holistically. I will not go in detail of what these standards have, because you can very easily understand these standards sitting with your VP Finances. And in fact, your VP Finance will be doing a crash course for you to understand these finance standards when they are elected. So I will not go into details of these. Alessandra, you already know, so that's super good. Next thing comes is usually we don't get to know or understand how do you track your VP Finance, because the VP Finance does like, are busy, they will be doing 120 things. You wouldn't know and you wouldn't understand what exactly are they doing and what is their role which they play every day in the entity. So for that, you need to understand the regular activities which a finance person does. They do accounting. They are the ones who are responsible to ensure that there is a proper legal system in your entity, which means contracts are being signed on time, invoices are being given on time, there is accounting which is being maintained on the software which we have. It's Wave or Contasol, and you need to ensure that finance is doing reporting to not only to your EB weekly in EB meetings, but also to your members, that is your whole LC. To then every month they're supposed to do reporting to MC, and this is another very important thing which you need to track if it's happening or not. Then your VP Finance is responsible to make sure that everything is happening in terms of membership criteria for your LC. This includes you playing a very important role in synergies with your VP Finance, because some part of the membership is done by you and some part is done by them. And your VP Finance will be tracking you if you are doing your part, and you will be tracking your VP Finance if they're doing their part in terms of membership criteria. Now let's see in terms of action steps, what are the points on which you need to track your VP Finance. First one is accounting. Now, some of the entities have petty cash handling, and at times you also have bank movements, receivables, liabilities, which are all put in your accounting software. If your VP Finance or someone from the past, right now the problem which we are facing is that our balance sheets are never balanced, or we have some problems, is because somewhere in the accounting something might have gone wrong, or there's some liability, something coming from the previous years which is affecting our accounting. And for this, solely your VP Finance is responsible. And all you have to do is every month sit down with your VP Finance and check the balance sheet. If the balance sheet is not balanced, ask them why. If it is balanced, good enough. Your accounting is maintained. But make sure your accounting is being done properly and it is aligned with the Global Finance Board chart of accounts. What is this? Your VP Finances would know. You can ask them more about it. The next thing is budget execution report. Now you create a budget in your planning and your replanning. You need to ensure that your VP Finance is showing that entire execution budget every month to your EB. How? And is not just showing only the monthly picture, but also because of operations not happening, ceasing that month, how will the quarter look like? And this is exactly the thing which will help you to ensure that even during planning, you are not planning zero in a product for a month. Why? Because if you plan zero in a product for a month, that is, you plan to do no exchange that month, you would be having no profit generated that month, which means you are losing one entire month to have incomes in your entity and move towards sustainability of the part. To cover that gap, just in the last month of the quarter is very difficult, and that is where the pressure increases on your operations corner, because then your VP Finance will be holding them accountable in terms of their fulfillment to the budget, and all they will have to do is fulfill their budget in that 1 month, which gets very difficult for the operations to do, because they start working in 1 month, they see results in next month, and finally the money comes in the 3rd month. For programs which are like even long term, for instance OGT, it takes around 1.5 months of process time. So there needs to be a budget execution report which they need to show you every month in order to show you the picture of how will this quarter look like, and will you have enough money in your account to pay off the upcoming LC fee, and also did you make any profits this month. The next thing is, once you see this, that okay, you do not have any incomes for whatever reasons, okay, it's not important what the reason is. When you see this problem, you cut down all your expense. So you need to adjust all your expense, you need to ask your VP Finance to adjust all your expense, and you need to track them if they're doing that or not. Cash flow management, your VP Finance is the one who is responsible to maintain the cash flow, and they are the ones that if at any point of time run into a situation, okay, we don't have money in the account, you need to tell them, okay, dude, this is your responsibility as finance to maintain the cash flow. why is this not happening? We don't have money to meet our upcoming liabilities, and you were supposed to maintain the cash flow. You were the one who was responsible to say no to certain things last quarter. If the entity can't afford, it just can't afford. So why did you not say no, and why did you not maintain cash flow? Now we are having problems. This is not okay. So this is how you need to hold your BP Finance accountable in terms of the financial activities they are doing, because you cannot make the entity run into a situation where there is no money for you to use. Next thing is your BP Finance have a scoreboard, which is first the finance standards implementation. The second one is their budget efficiency, like targets which they have to achieve in terms of budget efficiency, in terms of actuals, which means you have certain budgeted amount, and then there is certain amount which goes in actuals. Normally, you make 2-3 scenarios of your budget. At LCs, you can choose to make 100% scenario that everything, if it goes perfect, if it's everything fine, you will have 100% budget implemented. The second scenario is 75% budget implemented. The third scenario is 50% budget implemented, and the fourth scenario is 30% budget implemented. If you can't make all four, I would definitely recommend you to make 3, that is 100, 75, and 50% budget. And what is the difference in each budget is that if your entity is not bringing in the income which is expected of the entity to bring, you can see how you will cut down the expenses. And you need to tell your BP Finance to be ready with these 3 budgets, because the moment your entity is having problems, okay, it is time to start looking at budget number 2, which is 75% budget implementation, 50% budget implementation, and we will be doing expenses according to this budget. Why? Because the exchange was not able to fulfill their targets. So you will stop the overspending. Next thing is, this is something which you need to support them with, that is the legal and the administrative management. Now this is like seeing all the proposals, checking all the contracts, seeing if the money is coming on time or not. Even when you see the balance sheet, if you have receivables for the last 2 months which are same and have not been received, you tell your BP Finance, what are you doing? You're supposed to get this receivable now, because then we will start having cash flow problems. And if receivables are pending for too long, the people in the entity might forget. And this is something which was a case which I was talking to Vicent about. There were receivables from the past VPs for which Isaac in Valencia had paid a travel for them, and they were supposed to return it back. But of course, the term ended, and the receivables did not come. And even right now in his accounting, he's having problem to adjust that. But of course, those receivables might not even come in future. So this is the time where it comes your role as elects to see the receivables of your entity. Before you start your term, make sure your LCP current and your LCVP finance current gets everything in the account before you and your BP Finance starts your term. This is very important, and this is something which you also need to hold your BP Finance accountable on. Receivables need to come in on time. Last is external audit. So, well, this is not something which you need to look into so much, but this is something which you need to look into is for the internal auditing. And internal auditing is your BP Finance is responsible to do a financial and legal audit, which means they need to provide all the accounting statements, which is your invoices, your bookkeeping needs to be updated by your BP Finances. Your accounting needs to be done on Wave by your BP Finances. Your contracts for each customer needs to be put on a folder which will be shared by them. And these are the things which you need to ask your BP Finance if they're doing it or not. If they're not doing it, you could run into short-term legal problems as an entity if there is an external check. And even internally, nationally, we will be doing a very strict check in terms of your audit, because Isaac in Spain is supposed to maintain this for the last 5 years. You're supposed to store all the contracts physically and virtually, And this is something super important. So you are supposed to hold your VP Finance accountable on this. And for this, there are no excuses. Please do not take any excuses, exams, not well, la la la, whatever happens in the personal life happens. If they can't do this, they need to make a proxy in your EB who will do this. And you need to ensure that that proxy is doing this then. Super important. The next point is that you need to do a assessment of finance standards if your LC is implementing them or not. Budgeting, reporting, auditing, accounting, and lastly, sustainability. And sustainability is something which we will be working very closely with you and your VP Finance next year. So make sure that other standards, which are reporting, auditing, accounting, are maintained, and budgeting are maintained properly. Legality is something which is divided between EB and MC, MC and LC both. So you don't need to look too much into that. But for the other standards, you need to make sure that it's being implemented. Lastly, for all the expenses, you need to check return on investment, which means you need to, before someone says we need to invest on members, okay, wonderful, let's invest on members, but will these members come after the conference and do 20 exchange? You do investment on members. Once they come back, you check if they did 20 exchange or not. Okay, no, they did not do 20 exchange. Sorry, we are going to cut down on investment from this program because this program did not have any return on investment in the past quarter, in the past month. And this is the report which your VP Finance is supposed to present to you, and your VP Finance is supposed to tell you if the investment was actually an investment or it was just another random expense. And investment also comes in terms of if you're getting a lot of things printed and having an event where you're having high costs of printing banners and materials, you need to ensure that your exchangers are achieving their targets from that event, which means here is a kind of micro tracking which your finance will do to your operations, and it's needed, which means if there are 10 signups on Expa, out of those 10 signups, there are just 2 signups from that event, and you can get to know where the signups are coming from. From Podio, you can get to know, and you can also get to know this. Right now, I think they're working on Expa regarding this. Recently, they have these filters from where your results are coming, but on Podio, we already have this. So you can get to know from there that where your results came from. If your results came from that event which you had in your university, for which you had printed all those things, and the target of the exchange was to have 5 approvals from that event, but they only achieved 2 from that event. Here your finance needs to say, okay, sorry, you did not get the return on investment. It was not, it's not even 75% of what you was expected to get. We cannot do investment, this kind of investment, because it's not an investment for our entity. So we would not be doing investments like this in future. So this is what your finance will be tracking your operations on, and what you need to ensure that your finance is doing. Because if your finance is not doing this, you will never get to know as LCP if that money spent was an expense or was it an investment. And this is the tricky part, you know, this is a very difficult part to understand, because for this you need data. And if you don't have data, you cannot even plan your investment well. So if you don't know where your results came from last year, you don't know whether it was right thing to invest on or wrong thing to invest on. And this majorly comes on, like, if most of your approvals were done by your VP last year, this year, is it worth it to even invest on members going to conferences? Because the results did not come from members, right? So it came from VP, because our team leaders and VP worked. So should we invest on members? These are the kind of questions which you need to answer with your VP Finances, and your VP Finances need to set certain rules and certain minimums for them to be met. So this is a difficult part to manage, which is return on investment, and it will need you to look into the data more carefully. I can give you a suggestion. Sit with your operations and your current VP finances and analyze the results of OGV week and see if those results, which like means approves in this week and next week, the approves which are they coming from OGV week? So if you did certain investments in OGV week, were they beneficial? Even if you had a grant to cover for things for OGV week, was it used in the best way? If it was an unrestricted grant, maybe you shouldn't have used it in getting all those wonderful, beautiful things which you use to decorate the tables, and you could have used that money in something else, maybe covering the fee for the most performing member, so, or paying off the external debts if you have liabilities, things like that. So this is something which you can right now as a task you can do to evaluate if you invested something in OGV week, was there a return on it? So for the LCs which invested, did you get enough results? But the only problem which you will have is maybe like every LC had certain goal for OGV week. I hope, I believe, if those results did not come from OGV week, then that investment was not worth it. So this is something which you can check, and I can help you if you want any suggestions on this. And that's about it. Last thing for your finance people who will be elected in the next 2 weeks, probably, you will have a CFO Academy, which is on Cornerstone. What you need to ensure is the moment your EB gets elected, all of them have a working Expa account. And once they have a working Expa account, they can log on to Cornerstone. I will assign them for the CFO Academy, CFO University, in which they can get a certification that they are CFO certified and things like that. And after Brinco, they will have time for the 3 weeks after Brinco to complete that academy. And they just have 3 weeks. You need to track if they're moving ahead in that academy or not. Trust me, this academy is extremely helpful. It helped me so much in order to understand what exactly is finance and how to manage finances holistically, and it will help your VP finances as well. If you are interested to know more about finance and it's super fun, you should also take this academy, because it will tell you exactly where we are going wrong as an entity and what all are the things which we can improve. And yes, that's about it. This was it from my side for today. Alessandra, if you have any questions, you can ask. Did anyone else join? Mario joined. Hi, Mario. Sorry. Hi.
Hello. How are you?
Hi. What's Cornerstone? Okay, I will tell you what is Cornerstone. So there is this ISEC hub, which global. So there was this ICE.EC, which was like ISEC hub, which we had in the past, where all the resources were stored, and we used to get all the presentations and all trainings from there. But then ISEC International did a partnership with Cornerstone, and all the entities in the world right now have on Cornerstone an account where you can upload resources and take trainings. And I will show you, in fact, maybe once you see it, I think you will fall in love with it directly, because there are so many resources which you can use, your LCVPs can use, and especially, like, of course, the university which I was talking about is also going to be here. So all the outputs of the conferences are uploaded over here by AI. ISEC in Spain also has its own academy, and I will show you the trainings which you can take. Right now I am, so tracking my MCVPs is actually a training for MCP, but the reason I'm doing it is because it helps me to track operations, basic financial statements. So here, if you go on this, here if you go on this, you just go here, you launch it, and it tells you everything about financial statements. What happens, how do you do it, what are the statements. There are videos which are attached which tell you how does it look like. These are the statements. This is how it goes for the year. And there are the whole idea of having this is for you to understand how this will work. So if you see, I was telling you about horizontal analysis, vertical analysis, and ratio analysis of the financial statements. Your VP finances will be super ready if they go through all these universities. And this is something which you can also go through. It's super interesting. And for LCPs, I was going through trainings for LCPs as well, and you can browse through. Wait, I'll go on browse. You can go on browse over here and look for all the trainings which are available for LCPs. So just write here LCPs in the search, and you can look for it here. Like are coming. But anyway, here the importance of cash flow, how to get certified. What are the basic concepts in finance, budgeting, cash flow. So for me, it's because I'm registered as finance, so it shows me all this. However, I have also signed up for more training. Like some of you may or may not know about trainings for Roadmap 2020, and you all are part of people who are doing Roadmap 2020. So here is a roadmap crash course. Even you just go on the curriculum, and on the curriculum itself, it shows you if you are progressing in terms of knowing the roadmap better or not. And this is one curriculum which I did not open. There is a team leader curriculum as well. So see, I did not start this right now. Once I start this, it will increase the percentage over here. This is the university which your LCVP finances will be taking. And this is the platform which we have right now. So guys, make sure that all of you know it. If you don't know it, and if your current EBs don't know it, tell them this. They need to start using this super well. So yeah, these are the things which you need to know, and it will be super nice.
Thank you, Divi.
Welcome.
Divi, I have 2 questions.
Wait. Alessandra has a question. 2 questions.
Yeah, 2 questions. The first one,
like, 1 minute, Alessandra, 1 minute.
Okay. Say the next week at the school we have with Simo or too much.
After saying that, I clicked it.
When you finish, you say this and then you move.
Next week, team management, right? Okay, perfect. Okay, yes, Alessandra, ask me.
Like to sum up like this webinar, because sometimes I'm afraid like to mix my responsibilities as LCP with my responsibilities that I have now as LCVP Finance, because I'm afraid I will do things that my VP Finance is supposed to do just because I'm used to do them. So what the LCP needs to do is like to gather all the information and all the data that the LCVP Finance is calculating and make decisions based on that data, right?
Yes. So Alessandra, for this, so all the finance, all the LCPs probably will be going through all this data and analysis, which means they will also have this knowledge like you. But here the difference comes is because you have been in finance already, you are used to doing it. What your role will be from now onwards is to ensure that your successor knows all those things and is generating them on time and is giving you and your EB enough data and is showing you and your EB the right kind of data on which you can make the decisions for the entity. Do not do accounting and those finance things for your VP. Help if needed, because of course you already have the knowledge, you can always help, but don't do it for them, because once you start doing it for them, there it will be where they will feel like, okay, if you can do it, then you don't need me, right? So yes, your role from here is to assess the data which they are providing, and because you have the knowledge, you can cross-check if the data is correct or not. And once you assess the data, present it to your EV, come up with a plan with your LCVP Finance, how to make finance very easy for them, for your other VPs to understand. And that is how you can you have to now evolve your role. So apart from having your current LCVP finance responsibilities, which you will be transferring to your elect, you need to start taking on the role of leading your LCVP finance than doing those things. So that's how it would change. So stop doing those things which are which he or she would be doing for next year. But for your year as LCVP finance, complete them. So in the next 3 months, your VP finance does not feel like, okay, the data is not there because Alessandra was LCP last 3 months, and she did not do all those things. So for my last quarter, I don't have the data. You understand?
Yeah, I understand.
Perfect. And yeah, use the data, not do it.
Okay, perfect. And then the other question is, are we going to receive like a little bit more training about the distribution model? Because yes. I know that inside a VOP, we need to make decisions about it.
Yes, Alessandra, that would for sure be happening. That would be happening in pre-meeting. I will explain the whole distribution model, and I will also explain the pros and the cons of the distribution model. Now, this is something which will be happening for you people, and it did not happen for the past BOP, I believe, but it will really help you to keep a check also on the MC, because guys, you being BOP, from now onwards, you really need to do it in a way which doesn't only help the MC or just the LC, but it helps ISEC in Spain holistically. And we will be giving you very detailed trainings about the distribution model and about the financial model of ISEC in Spain, both the things, financial model and distribution model. So yeah, it will be taken up. It's in pre-meeting. Make sure all of you are attending pre-meeting with your LCP current, and push them also to be present for that, because it's going to be very important for them. Yes, that's it. Mario, if you have any questions, you can ask me.
What's the difference between the financial model and distribution model?
Okay, so financial model is the model on which the entities of the budget of ISEC in Spain is going to be looking like, and what part of it is going to be covered by the LC and the MC. It tells you how is the model going to be working in related to growth of the entity. So for us, it's aligned with the previous year. And if in the previous year you did something, this year, how you need to increase or level up that number of operations in order to sustain in terms of finances. The distribution model, on the other hand, tells you the split between different entities of the entity. That means how is the money going to be divided between different LCs of the entity, and what parts of that money will be on the fixed part and on the variable part. And this is based on our current model, and for different countries it's different. For some countries it's entirely variable, for some countries it's fixed and variable, for some countries it's all fixed. So that is how it would be distributed among the LC, and what parts of the MC budget will be covered by the LC is in the distribution model, and how each LC will cover it separately. Just for you to know an example of this, for example, right now Zaragoza is just covering fixed part, so the distribution of Zaragoza on the distribution model is just for the fixed part. But on the other hand, ISEC Pompeu Fabra Barcelona is covering the fixed part and the variable part, and for them the distribution is separate in terms of the quarterly MC budget. So that's the distribution model. So that's the difference between the financial model and the distribution model. Do you understand? Of course, I will explain you more in detail all this, how it works and how it's supposed to happen, and how the financial model helps you, and how it will ensure that you will grow next year. So what I will be sharing with you is a very important data in pre-meeting, that is the exchanges your LCs did this year. So next year, when you are doing planning, you definitely need to plan much more than that if you want to go in profits, because the financial model will tell you that this part of the budget will be covered by you, and if you drop in that quarter in comparison to last year, you would definitely go in losses for that quarter, because last year you had more revenues in that quarter. And this is something which will help you for planning, I believe, to set minimums to your EB, at least for planning in terms of finances. So yes, we will be having a very depth talk about the financial model and the distribution model.
Okay, thank you, DB.
You're welcome. Alessandra, any questions?
No, everything is clear.
Perfect. Thank you, guys. Let me know if you have anything which you want to know more. I can have individual calls with you too. And next week, you will have same webinar with SEMO for team standards. Okay, that's another very, very important thing. Your VP Finance will also be looking into team standard implementation, and it's a part of the sustainability standard. And enjoy, guys. Weekend is near. Party, and good luck for your elections. I believe most of you will be having them now, so good luck.
Thank you.
Choose super smart finance people.
Thank you.
And you're welcome. And your current VP Finances will be approaching you to talk about the kind of pipeline you should have in finance. So make sure that if they don't approach you, you approach them. Because I had a call with them yesterday, and this is very important for you to define what kind of VP Finances you want for your term. Cool, Alessandra, you can do it for yourself, so it's fine.
It's going to be a meeting with myself.
You can sit in front of the mirror and do it. It's fun. Cool. Thank you, guys. Be there tomorrow with the webinar with SEMO, and please ask others also to be there, because the more people are, the more questions there are, and maybe there are some questions which you are missing, so they can be catered to. Thank you. Goodbye.